Hope everyone is doing well. So just real quick, here's the daily chart of the Emini, and we've been in this really 9-month trading range. Some will say it's a 3-month trading range. It's really just, if you're referring to the 9-month trading range, it's really here, starting somewhere here. So here's a low, here's some lows, and some lows down here. Market broke below it, tested 20% correction, went slightly below it, reversed up sharply. Here is a strong enough rally, 3 consecutive bull bars, that the market is probably always in long and strong enough for at least second leg. We have a breakout gap here, but we have bad follow through. So it's kind of like this. Strong enough bear breakout, always in short, probably will get a second leg down here, but we had to go sideways for several bars. So what we don't know is the second leg going to be big and strong, taking us all the way up to here? Maybe a measured move of this? Or is the market going to have a deep pullback and maybe create some sort of wedge top? So pull back, rally, form some kind of wedge, and more trading range price action. But more on that later on. 5-minute chart, and I'll do a bar by bar in just a second. So the market sold off on the open and tested the higher low from 10:05 Central Time on the 27th. Sold off, had an opening reversal, and really formed a trading range day. And the important thing to realize is when you have a big sell-off like this, and it does rally, if the sell-off is greater than, or let's just say the sell-off's half of an average day's range, it's really hard for the market to go much above it. Here we had a strong breakout and it led to 3 legs up, but ultimately we closed below the open of the day. And we tested it several times. This line I've got right here is the open, so sold off, rallied, broke below the open, reversed back to the open, went up a couple of points, sold off. So this was ultimately a trading range day. So let's see here. Just kind of, there we go. So first bar of the day, I'll do it like this. I don't want to deal with the scaling right now, so I just have it on automatic. First bar of the day, huge big bear bar. And the one thing you have to think about on the open, so this could be a trend from the open day. The opposite of this, we could have an opening reversal, which is what we got, and it's going to be one or the other. And the first thing, if you've been in Al's trading room long enough, you've heard him say this plenty of times, do you really want to risk? Do you really want to sell, put your stop somewhere up here, set a target down here? No. The probability at this point, in general in the open, it's 20% chance. Bar 1's the higher low of the day. Now, is it 20? Is it 25? I don't know. I equate that to its low. And it's 1 out of every 5 days, give or take. Obviously, last week we had more than 1 out of every 5 days. So if you're selling here, you've got to understand that a lot of traders may scalp out. They may sell if it's a bull bar, they sell higher, get out break even on the first, profit on the second. They may sell if it goes straight down, just scalp out. But you have to be expecting that there's going to be something disappointing here. We've also got this support level and the low of the day. Low of the prior day. Bear bar, 2 problems with it. It's small compared to this. It's follow through, which is good, but it's small. And it's a tail. So the tail is about the size of this body. So you have to wonder, this bar, when the market closed here, small tail and the market just went straight up. Well, why don't we do that today? And the reason we didn't do that is because the bears are hesitating. There's not a sense of urgency. Another big bear bar. So breakout, follow through, bears sold the close. So that's good. That's a sign of traders selling. However, where's your stop? If your stop's up here, that's one time your risk. Probably not going to happen. And I forgot to mention, but on every day, 80% chance you get a minor reversal, 80% chance you get this, a minor reversal or minor reversal, but usually this is too small. Normally you get something like this. 50% chance you get, if I can find a day, probably this day. Now, 50% chance you get a major reversal like that, or we've got a better day. We had a lot of trend from the opens though recently. Here's kind of a major reversal. So sell off, major reversal up, rally, major reversal down. You could also assume it's minor, but you get the point. So kind of like this, 50% chance the first initial move reverses. So big tail, but again, bulls that bought on the open were able to scale in, make money. Bulls could arguably buy on a stop, buy this close, and bulls that bought this low made money. So it's a sign of limit order bulls making money and probably going to go sideways and form a trading range. Bull inside bar, closing on its high. Probably not a great buy. Strong enough sell off that the market's probably going to have to go sideways. And you may still get a second leg down and a second attempt to break below this low. So the bulls are trying to get a double bottom. They're trying to create a failed breakout here. And so far they're doing an okay job. But it's still a little early to be buying. The bears, they have a low one short. Some bears will sell below it, but arguably you probably need to stop up here. I don't think that's I think there's too much risk that you'll find buyers below. So bear bar, follow through bar, but on the close of this bar, notice this tail. This tail is, while it's a follow through bar, this tail is much bigger than this body. So it's more of a trading range bar than a trend bar, even though it is a trend bar in what's a bear trend. And then we get a big bull bar. So arguably it's kind of a micro double bottom, smaller time frame, up, down, and up, closing on its high. Always in bears that sold below or sold any of these closes get out above this bar. And the reason is, if you're a bear, you sold here, scaled in higher, maybe you sold below this bar, clearly disappointed. They gave up here. It's a credible buy. Second failed breakout of this higher low around 10:05 Central Time on the prior day. Follow through or an okay entry bar, trying to reverse the past 6-7 bars ever since here. And so far, if you ignore bar one, this is really just kind of a gap down. I mean, if you think about it, this could be just part of the gap down. And if we remove this bar, Al talks about this, take this bar out of the day, and so far we have a trading range. So we may have more trading range price action. Tail, so a lot of bulls bought the close, scalped out. Bears sold this high, sold more higher, and they made money here. Possible second leg trap, one leg pullback, two. Second leg traps often happen in trading ranges and broad channels. And my voice is a little hoarse, so it's kind of hard to talk. So I apologize. But after 3 consecutive bull bars, probably buyers below. Not a great signal bar below here. And strong enough surprise, you'll probably get a second leg up. So not a great place to really be buying. We're also back in the middle of the prior day's range. So an obvious, it's a profit-taking area for the bulls. So high one buy, but bad stop entry in what's probably going to be a trading range. Probably sellers above. And you can argue it's a low too short, but again, bad signal bar. It's a doji. Consecutive inside bars. Maybe it's a triangle. Maybe we break above and turn down and form some sort of wedge. So you could have a 1 push, 2, and a 2-legged pullback, or a triangle, a breakout, that reverses down, which would be kind of like a final flag in a wedge. 1, 2, 3. And there you go. So now I have a wedge. 1, 2, 3. Tested the open of the day. Close enough that it's probably an okay test. And, is it a strong enough sell? It might be. It's a reasonable sell, but following 3 consecutive bull bars, you may break to the upside. Could be a kind of a gap if you ignore this tail. Possible breakout test here. And you may have enough disappointed bears who sold here, had a stop up here willing to scale in. They may sell more here. They're going to be disappointed where they may just look to get out break even on the entire trade. So they sell here, sell more below here, and that's their break even point. And so far, it looks like it triggered, immediately turned up. So a lot of bulls, some bulls will buy above it, betting that we get an upside breakout. What do bears do that sold below it? Probably the stop is the high of this bar and not here. And you can see bears trying to get out of break even. However, they were unable to. And price went one tick above and immediately turned down. So that's kind of that's the challenge of a trading range, is it races, it triggers a reasonable entry, goes above it, turns down. So some traders would use a wide stop, betting on a trading range. Maybe they sell here, stop at the high of the day, or if they didn't, if they got stopped out here, they look to sell again. And the sell, unfortunately, might be below this bar. But either way, you have 2 choices. You have 3, really. You sell below it, really 2. You sell below it, get stopped out, or sell, stop up here, or sell and use a wide stop, and you didn't get stopped out here, and you didn't have to sell again lower. But this is very common in a trading range. You have a credible signal bar, 1, 2, 3. And I forgot to mention, 3 consecutive bull bars, this might have reset the count. So this could be the first push, second push, and then the third being right there. But trading ranges are always making it difficult and confusing. So reasonable buy, 3 consecutive bull bars, but it's failing at the moving average. Is this just a pullback in the bear trend, or is this the start of a rally? It's hard to tell. Same thing up here. So bear bar, another bear bar. We were trying to form a double bottom with this low. And then we get a pause. So again, it's what I said earlier. Sell the closed bears, scaling in here. This is going to be break even, so it's a credible area to buy. It's also probably around a 50% pullback of, so here's 50% based on this rally. You've also got the, I did not mean to do that. You've also got the, and I'm sorry, my voice is a little hoarse. You've also got the stop entry buy here. So this area right here around 1141.14, 41.15 is going to be support. And we're trying to, and the reason for that is some bulls will take profits on the way up and they'll move their stop to break even. It's a credible buy and they don't want their stop to get hit. And if their entry price was 15 even, the low of this bar went to 16.50, so it did not hit their stop. And even right here, it did go to 15 even, so you'd been stopped out. But what's interesting is you would not have been stopped out had you had your stop 1 tick below break even. And that happens. But nonetheless, trading range day, and bears are going to use this. Likely they're going to be disappointed enough, strong enough breakout for a second leg, disappointed by this second leg, at support around this low, around that theoretical break-even price from selling the close here, selling more below this bar, second leg down. A lot of them will give up, and they may give up above this bar, which created that. So why did this happen? Well, possibly always in short, strong enough for a second leg here. We're getting a second leg, but if I'm selling a low one short in what could be a higher low and a failed breakout of this low, so the bulls, here's a low, here's a higher low, bears broke below it, reversed up, and they're trying to break below it again. If the market reverses up, it's a failed breakout of a double bottom, and it's second entry buy. It's also a wedge. 1, 2, 3, maybe 1, 1, 2, 3. Anyways, strong bull bar, but again, bad signal bar. Often that happens pretty frequently in a trading range, where bad signal bar here, bad signal bar here. So again, bad signal bar. Some bulls will buy above it, hoping that we get a second leg up and break above the neckline of this, maybe this double bottom here and here. But either way, a breakout above this high or this high and a measured move up and a test the high close. Follow through, but weak. Possible measuring gap, and then another big bull bar and a strong breakout. So 3 consecutive bull bars. It's clearly by the close. Probably came by the close here, but definitely here. Possible measuring gap. And again, strong breakout, testing the prior day's close and the high of the prior day. But this is climactic. First push, pause, second push, pause, third push, parabolic wedge. It's a possible second leg trap. And we have a measuring gap up here, or a measuring move projection. You've got a possible leg one. Well, not quite, but we went past the leg one, leg two projection. So it's possible it's a second leg trap, but again, it's a lot of bull bars. Best the bears probably can get is sideways, and we'll probably have to test back to this high close. Bulls will be disappointed. They may scale in lower, look to get out break even. So disappointing. We're testing this measuring gap. Disappointing here. Is it always in short? Probably not yet. This is still stronger than the sell-off, and the bulls never got a chance to get out break even. And when you look at this, you're probably thinking it's close to always in short. The bears probably, we're pausing at the moving average. The bears probably need one more bar. And if they can get one more bar, then it's probably always in short. And they didn't get one more bar. And the reason for that is, if you're a bull and you want to scale in, you want to scale in when the market's strong. When it's far, you want to scale in when the market's just about to flip. Or if you're buying, you want to buy when the market's almost flipped to always in short. So 3 consecutive bars, not quite, closing above the prior low. And the way you know that it might be always in short on the next bar is you put yourself in the situation of being long. So I'm not willing to. Here's the early exit. I didn't get out there. I don't want to get out here because it's probably going to go sideways. I'm not, my premise hasn't changed yet. This could just be a deep pullback. And even here, it's not quite changed. But if I was to get a big bear bar, my premise has changed. And clearly it didn't. So 3 consecutive bull bars, probably going to test this high and go a little bit higher. But there will be bulls that'll take profits back at this high close. And they did right here. Probably forming some kind of a trading range. Possible wedge, 1, 2, 3, or 1, 2, 3. But strong enough breakout that you've got this measured move projection, probably get 2. And you may get this measured move. But strong enough breakout that we probably need one more new high. And 3 pushes up here, 1, 2, 3, before the market can turn back down. But we're still within the range of Friday. So 3 consecutive bull bars, bad short below, probably buyers below. High one buy, top of the trading range, probably bad stop entry buy, probably sellers above. And there were. Second entry short, You can sell it, but again, tight enough channel. Probably the first reversal down will be minor, but it is a higher high major trend reversal. Couple legs down, couple legs up. It's an okay short, but again, tight trading range, not ideal. Big bear bar, so possible give up bar, and the bulls immediately bought it. So just as I said, strong enough breakout, you may have to have 2 legs up, and this might be tight enough that this first reversal, this might be tight enough that this first reversal down will be minor, and you may get a second leg. Possible inside bar, so possible final flag. Big bear bar, another bear bar, doji, strong bull bar. So the bulls, bears broke below this low, tried to break below here. 3 legs down, 1, 2, 3. It's a double bottom here, micro double bottom here, and a wedge. Again, here, here, and here. Can you buy this? It's forcing you to buy in the middle of a trading range. Not an ideal location. The buy was probably down here for a scalp. So a lot of bulls may scalp out here. And strong enough breakout that you may get a second leg up. Not a great sell below, so probably buyers below for a second leg. That might be our second leg. So again, now we have another wedge. 1, 2, 3. Double top here. So we had a higher high major trend reversal here, a lower high major trend reversal here. Now we have a more complex 2-legged pullback or trend line break, and it increases the chances that the market will sell off. But even selling here, you have a big tail below, just above the moving average, so it's not ideal. And we finally broke to the upside. So bull breakout, but could not close above these highs. Possible wedge, 1, 2, 3. Consecutive buy climaxes here, here, and here. It's also parabolic wedge or wedge, 1, 2, 3. So the Bears want another stop interest short. It's also a micro channel, 1, 2, 3, 4, 5 consecutive bull bars, maybe 6 consecutive bull bars. So may have a little bit higher, or more up, but probably not much more. So strong breakout bar. Is this going to be a measuring gap? Probably not. The bulls are hoping we get a measuring gap. They want measuring gap from here, which projects up to this target from the low of the day to this high. And they also want a measuring gap from the lows to these highs. Probably won't get it though. So here we have another bear bar closing on its low. So wedge, 1, possible wedge, 1, 2, 3, or 1, pullback 2, pullback 3. 1, 2, 3, 1, 2, 3. So it's a nested wedge. Bulls probably get out of longs below this bar. Aggressive bears can sell. It's possible micro double top, 1, pullback 2, or up. This tail right here is the first leg. So up, down, up, down. It's an okay short. Stop, you could sell, put your stop above it. 40% chance it's a major trend reversal and you get a swing trade. 60% chance it's something disappointing. If you did sell, your stop's up here, probably not here. Doji. So possible 2-legged pullback for the bears, testing this high close, and then we got a big bear bar. So what happened here? Disappointing. I'm going to delete this. But we did close. Let me put it back. Let me back up for a second. So catch my breath. It's kind of hard. My voice is just really hoarse right now. And it's hard to talk for a long time right now. But we broke above this high, turned down. The bulls tried to break above it again, and they gave up on this bar. Disappointed bulls bought this close. Disappointed with this bear bar. Tried to get out of break even. They tried here, tried again. It went up, and the bulls gave up. And now we have a doji, so it's possible two-legged pullback, just like this, two-legged pullback. And the bulls hope that there will be aggressive bulls willing to buy, just like they were down here. They were willing to buy up here. Bulls willing to buy again. However, what happened here? We couldn't even get above the high, and the bears turned the market down. So 3 consecutive bear bars. It's possible wedge top. We have 2 legs down, but this may be a complex first leg down, and we may not have even finished the first leg. So we could quickly sell off back to the open of the day. When you look at this day, it looks like a trading range. It does not look like a strong trend day. We rallied, but you have to ask, just like down here, why did we sell off and hesitate at a new low? Why didn't we break strongly below the low and then pull back? Here, why did we hesitate just below major resistance? Why didn't we break strongly above and then pull back? Same thing here. We're hesitating as soon as we break above it and pulling back. You don't want to hesitate at important resistance. You want to break strongly above it and then hesitate. Kind of like here. You want to break strongly above these highs, and it's okay to pull back to it, although this was a deep pullback. So 3 consecutive bear bars, and we have a doji, so it's possible. Kind of a micro double bottom, down, up, but again, it's a micro channel, not a great buy above, and you may get a second leg down, and then the bulls gave up. So the bulls tried for a wedge bottom, 1, 2, 3, and this signal bar closed poorly, which caused the market to immediately sell off. Big bear bar, surprising bear bar. It's a breakout below a wedge. Probably going for a measured move down, which conveniently, no surprise, takes you to around the open of the day. And another big bear bar. So breaking below all these lows, aren't we going to get a measured move down of this initial range and test all the way back to the low close? Well, it's possible, and there's a reason why this initial range, a measured move down, takes you conveniently to the low close. The institutions and computers did that on purpose. But the reality is, this is probably a sell vacuum and a second leg trap testing the open of the day. And now that we're at the open of the day, we're probably going to find buyers. Another big bear bar. Is this going to be a repeat of this? Well, probably not. When you get a lot of buying pressure and you have a big sell-off, then you have a big rally, you have a trading range here, you broke up, and then you have another trading range, so it's trending trading range. Odds are you're going to test back in the upper portion of the upper 1/3 of the lower range here, and we did that. So, as strong as this is, and it is sell to close, the bears are probably going to be disappointed soon. So sell to close, tail, so it's a warning. Just like here, buy the close, tail, it's a warning. You may get a few more bull bars, and in a trading range, when you get 4 or 5 sell to close bars or buy the close bars, you have to wonder if you're going to get many more. So bears probably going to be disappointed. What are they going to do? Well, what did the bears do up here? They were disappointed. They sold back at the high close. Bulls. Bears, disappointed, took profits back to low close. Bears, disappointed, probably going to take profits back at this close. So you can see that price sold off, went below the low but turned up, so it's kind of a micro double bottom. Failed breakout of this low, and boom, big bull bar. So it's a bull bar testing the open of the day, testing these lows. The bulls made money buying this low, scaling in, made money here. So lots of trading range price action, tight enough channel. Bulls are probably going to scalp out. We're probably going to get a small second leg down, or at least go sideways here. I don't think we're going to rally up to here, at least for the next several bars. Bears sold this high, scaled in, which is what happened here. Bulls also bought a 50% pullback, betting the price would get back to here. Now you can see second leg trap. So bears, excuse me, possible second leg trap. So you'll have some bears. There we go. I had to kind of rest my voice for a second. So this is a possible second leg trap. Bears were disappointed. The ones that were quick were able to take profits down here. If they waited till this, they had to take profits quickly and couldn't get out at the low close, so they're possibly trapped. And they may give up above here. So strong rally, but sold off into the final minutes of the bar. More trading range price action. Disappointing for the bulls, disappointing for the bears. Again, this is probably going to be the most important price for the rest of the day. So it's going to go below it. Bulls are going to buy. It's going to go several ticks above it. Bears are going to sell. And we're going to oscillate. You know, just look how important this price level's been. Sold off, tested back to it, sold off, broke above it, but tested back to it, rallied, tested back to it, rallied further, got back to it. So, you know, just as, you know, maybe we're going to test up here. Probably always in long, but again, I don't want to be buying up here. While I do think you may go a little bit higher, I see first push, pullback, second push, pullback, third push, maybe first push, pullback, second push, pullback, third push. Again, if there's one thing I can stress, trading ranges are notorious for forming wedges, three push patterns, second leg traps, and they're always trying to get traders to do the wrong thing, to buy too high in a trading range, sell too low in a trading range. And one way you can think about it is risk. I don't have time to discuss this in this video, but if I'm buying this close and I put a stop down here, what's the probability price will go all the way up to here before it goes down to here? Well, that's my initial risk. Just as if I'm selling this close, what's the probability price stops me out before it goes? 1 times my risk. That is a fundamental piece to understand about trading. So it's too close to 50-50, therefore I want to sell higher, I want to buy lower. I don't want to do anything right here. Another bull bar, strong bull breakout, but possible 3 pushes up. 1, pull back 2, pull back 3. Bear bar, but first bear bar after several, so probably minor reversal. It's also late in the day, so you could easily sell off quickly. Bulls disappointed. Bulls buy the close, disappointed, tried to get out break even, and it let them. And the ones that did get out break even made the right choice. The ones that didn't had to bail out quickly as price went below this bar and down here. And we tested the open of the day. And interestingly enough, on the final, 5 minutes before 3 o'clock, 1 o'clock Pacific time, when the stock market closes, we raced up aggressively back to the high close here. So bulls, in theory, buy the close, scale in, and let them out. And then we immediately sold off here and then sold back to these low closes. And finished the day below the open of the day. Always in. Might be always in short below this bar. Stop up here. If you do sell below, probably get out. I'd certainly, I don't know. I'd get out at this close or, maybe several ticks above this bar. And my problem with always in, this is always in if you had to be in the market. I would not be a fan really of selling here because I'm expecting to pull back to the moving average, so I'd rather wait. But if I had to do anything, I'd be short. I'd get out. If I was eager, if I was trading traditionally always in, I'd probably get out above this bar. Certainly above here. But realistically, if I saw this bar right here, I would exit. I don't want to be short at the lows of this higher low down here. So it's buy above here, stop down here. No reason to get out. Probably get out below here. and tight channel. You can sell below here, but if you do and you get stopped out, you sell again below this bar. But that's pretty aggressive. And if you sold this close, you probably get out above here. It's a buy above this bar, and you get out below here, or you hold through the pullback, and then maybe second entry short, you get out below this bar. If you do, you don't buy above here, and you get out below this bar again. And you get out below this bar as well. And again, the problem with always in trading is the longer you study this, the more you start to realize that always in trading it's not effective in trading ranges. So I don't want to I don't want to sell. I don't want to be long and ride through this pullback. I also don't want to be short and ride through this. So either way, the bulls, maybe they get out above this bar, or the bears get out above this bar. And if you're aggressive, it's a wedge, it's a double top here. Some bulls, maybe they take that short. Otherwise, they wait for here, and maybe they sell this close, stop up here, or sell this close. Bulls probably exit above this bar. And then it's probably buy the close, stop down here, and again, late in the day, you get out, one tick below a bear bar. So I hope that helps, but always in is great for a trend day. It's great for this. And I'll make a separate video on this day, but you buy the close, stop down here, and you just hold. And no reason to get out. If you did, you just buy again. No reason to short, but if you did get out at longs, you just buy again, you buy again. And in theory, you just hold. But it's more effective if you buy the close and you realize the market's far from the moving average, and you get out and you buy pullbacks. So you buy below this low, you scale in, and then when the market goes up to here, it's more effective if you wait and buy the moving average. So, and if you can do that repeatedly, you'll do much greater than simply holding. And the reality is most days don't do this. They do kind of this or this, but more on that for another day. Hope this video helps.